Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX. It's a little after 8:30 a.m. on Monday, July the 7th, and we'll try to catch you up after the long holiday weekend and what's going on in the commodity world. Several different things happening, resulting in generally weaker prices for the ags this morning. The crude oil market was lower overnight based on OPEC increasing their output projection for August greater than what was anticipated. But it recovered and erased those losses by this morning's trade. And so we're seeing modest gains there, but we're seeing heavy selling in the ags this morning. So let's kind of go over what we're seeing overall in these markets. First of all, we did see President Trump appear in Iowa late last week on, Thursday evening on July 3rd, and there was some anticipation that perhaps he might announce a big trade deal, possibly with China. And that was providing some support for the grain and oil seeds when we closed out last week. That did not happen. There was just a lot of rhetoric about the one big beautiful bill passing. That bill did have some very positive factors in it for biofuels, which I covered in last week's videos. But outside of that, nothing new to really support the grain and oil seeds. So also, as I indicated last week, the 4th of July holiday weekend is a very pivotal weekend for the grain and oil seeds, particularly for the corn and soybean markets. But as traders return from that holiday weekend, they will take a look at the 15-day outlook. And if it is favorable for crop development through the corn pollination period, which the 15-day outlook looks through much of that, then they tend to sell hard on that Monday morning coming out of that holiday. And if it's hot and dry for the Midwest, they tend to buy and put risk premium in. And when they looked at the weather models last night, they were generally favorable. So they started dumping on the markets, particularly in the lack of any announced trade agreement with China. And so that's why we're seeing the big losses in the corn and soybean markets, wheat as well, with seasonal harvest pressure, double-digit losses this morning for corn, soybeans, and wheat. That continues to be the story at this hour as we go forward. Now let's talk about tariffs, because tariffs, I think, are going to be the primary story this week. The 90-day pause, remember back, the reciprocal tariffs were set rather high for some countries. Those were set on April 2nd. And then shortly thereafter, we saw the 90-day pause for all countries but China. And then China got its 90-day pause in May, and that expires on May the 12th. But the 90-day pause for all other countries expires tomorrow night, midnight, between Tuesday night and Wednesday morning. And so there's a lot of questions what's going to happen. We have two trade agreements / frameworks thus far, one with Britain and one with Vietnam. And those are acting as models now for negotiating other agreements. We did get some optimism expressed this morning from the president of the European Commission, who said that she was optimistic that they will have a trade deal with the United States after a conversation with President Trump earlier today. And so we very well may have one with the European Union. Now, what do we know at this point as we approach that Wednesday deadline? We know that the United States has been focusing on 18 countries. We have agreements with two of them. Those 18 countries account for roughly 95% of the trade deficit that we have. And the other countries, not so much so. So those other countries, more than 100 countries that are said to be getting letters from President Trump this week saying that they're going to see their tariffs go up, back up to those April 2nd levels. Now, for those 18 countries, try to get as many agreements as possible announced and frameworks over the next couple of days. Some of those may be significantly positive for commodities. I thought the Vietnam one was very positive for commodities. And so that's something we need to be keeping our eyes on for overall. That could be very positive. But what will get announced? What doesn't get announced, there's some indication from the White House that if they're negotiating in good faith, there could be an extension. For all others, they will receive letters, according to the White House, that say that the tariffs will go back to those April 2nd levels on August 1st. And they insist that's not an extension. That's just saying, okay, this is when they're going back up and this is when they will take effect. Now, I assume that that would give them some window of opportunity to get back to the negotiating table, perhaps. But there's also an administrative side to it, also probably why there's a delay in having them go back into effect as well. But that's kind of the timeline that we're facing overall for these tariffs. So we could see some volatility. Not a lot of other economic news out this week to impact the markets. So this appears to be the primary story for this week to see how all of this plays out. Now, watch these trade agreements very carefully. I talked last week about the agreement with Vietnam and the clause it had in there which punishes China. China had been using Vietnam as its neighbor as a transshipment place where it can move products through to the United States to avoid our restrictions. Those transshipments now have a 40% tariff on them, which should essentially shut them down. Look for similar language in any agreement we reach with the European Union, maybe not the transshipment, but in some way helping to contain China. China has threatened retaliation numerous times and again over the past week for any countries that do sign such agreements. The European Union is not a country, it's a block of countries, but similar things there. But relations are strained right now between China and the European Union. They have their own trade disputes. They're threatening retaliation, of course, if they sign an agreement with the United States that hurts China. But what we're seeing is the European Union move forward toward an agreement, it appears. Now, evidence of the relationship, the status of the relationship currently, is that they have a summit scheduled and a series of events later this month in Beijing to celebrate the 50th anniversary of diplomatic relations. But some of those events have already reportedly been canceled, which may be an indication of those strained relations. The chances of China resolving its trade differences with the EU may be slim, suggesting more problems for its exports because the EU is one of its largest trading partners. The United States and EU are the big consumer markets that China's been pursuing, and it now has problems with both. And that means trouble for its manufacturing sector as well. Then we had the BRICS meeting in Brazil, the annual BRICS meeting in Brazil last week, and President Xi Jinping didn't attend. That is huge. That is significant. In fact, the two biggest members, their presidents did not attend. President Putin of Russia did address the crowd by video, but did not attend either. BRICS seems to be not falling apart as an organization, but falling apart as a unit to threaten the United States. That momentum seems to be going back to the United States, especially after the U.S. strike on Iran's nuclear sites and Iran's partners and supporters who said they would be there for Iran, that would be Russia and China, went silent. They were not there, and other countries saw that. And so they're moving back toward the United States. Now, as we go forward, we're going to be watching for these trade agreements. I mentioned the 4th of July holiday weekend being very pivotal for the grain and oilseeds. I mentioned that we could get trade agreements that are positive for commodities. But I think the primary focus for the ags right now is going to be weather. We're in that part of the growing season. It's too late to significantly impact grain and oilseeds positively, I believe, at this point. Because we're now in the primary focus on supply. Is the weather going to be agreeable or not agreeable? This morning, it is agreeable. And that's going to be the focus, I think, in the next 30 to 45 days, until or unless we get some type of blockbuster deal. And that would probably have to be a deal with China that's seen as a blockbuster. I'm skeptical that we can reach such an agreement near term. It is possible. I do think that if such an agreement is reached, that it would be an indication of how bad China is hurting. And in my view, they are not hurting bad enough now to give up making a bunch of concessions. But that's what we'll be keeping our eyes on. So in the meantime, the ags look to be facing this weather market going forward, which for the time being is negative, while crude oil continues to kind of build on its strength. Even the bearish news from the OPEC meeting failed to hold it down. Greater focus on trade deals being worked, economic growth happening. If we get those trade deals, we have broader global economic growth, which would increase demand. So that's our update for this morning, July the 7th. We'll continue to keep you updated as we learn more, particularly later this week as we see how things unfold with these trade agreements. Until then, I hope you have a safe trading week and a profitable trading week. Remember to like and subscribe if you want to continue to receive these updates from the trading floor.